Right. Hey guys, welcome back to Sun Crypto. It is June 5th, 2023, just about like a 6:30 p.m. Eastern Standard Time. In today's content, we'll discuss about BTC. It's been a while since we've gone for a live stream. So we just broke out below the 26-27K area after a consolidation range for like 4 weeks. So it is a good time to reassess, reanalyze, and recheck the wave analysis. Are we in a wave 2 correction, or are we still in a wave 1 impulsive move? So we will discuss all of that during the live stream. So if you have any question, don't forget to basically put it in the chat room and all that good stuff, right? So let me make sure we got 589 for the sound. So let me know if the sound is good. We got XRP Dan, Miss Bears in the house. We got Quiet Cook cooking some 1 inches in the kitchen and flushing some 88 down the toilet, right? So we'll see how it goes, okay? Quiet Cook, 589, right? So now let's just go ahead and start from the top, so it'll make a little bit of a sense, right? So it'll make sense based on based on what we're going to be talking about in terms of like a wave analysis, right? So as I've been saying over the last few months, right, I've been saying it since like since last year, right? BTC was in a 5-wave structure to the downside, right, from like a 69K. So we said we got our W, X, Y, X, and Z to the downside at 15.5, 16K area, which basically coincided with the 50% pullback, right, on the macro level, right, from like a swing low, Leroy 4K, give or take, right, up to a 69K area. So 50% pullback, we corrected down with a 5-way structure. So what are we looking for? Okay, we knew after 12 months, give or take 365 to 400 days, BTC tends to find a macro bottom. So we said it a long time ago. We said back in November 2022, we said the move down to a 15K, 16K area could possibly be the bottom, since like we already completed a 12-month of a downtrend. Okay, the 12-month cycle been completed, so no need to be looking for extreme lows like 10K, 3K, and all of that good stuff, right? So that's why many bears, okay, over the last 6 months, the move we got like from 15K to 31K, they missed it, because what they were looking for was like a continuation to the downside after the 365 days cycle. Okay, after 365 days, no need to be looking for lower prices. Price action could correct lower, but it could only be in price, not in time, meaning like you're not going to get like another 60 days or like 180 days of a downtrend. It could have basically retested like 11,000, 12,000, but most people would have missed it, because it might have been like a week or like a 24-hour dump and then a push back up. Okay, you see what I'm saying? So after a year of a cycle, you want to look for a cycle to the reverse direction, basically the opposite direction. Okay, so that's why we were saying on a monthly basis, right? We said clearly, before I go back to the wave analysis, if you've been watching our channel long enough, what were we saying back in November, December? In Q1, Q2, we'll try to regain control of the 21ema, but we're not 100% sure if that move going to break it and go up to like a 0.608 to the upside, 39K to a 41K area. Regardless of what's going to happen, right, we're just going to monitor it once we get to the monthly 21. If we get rejected, it will be a time to basically be looking for our wave 2, right, in terms of a wave analysis, right? So remember, sometimes you can analyze the market in terms of moving averages, right? Sometimes you can analyze the market in terms of wave analysis. Sometimes you can analyze the market just in terms of indicators like MACD and RSI, but you have to define your direction. Okay, you have to define your direction. Okay, so now if we go back to the lower degree, right, after completing our 5-way structure in terms of W, X, Y, X, Z correction, the confirmation we had about the wave Z was like a divergence. Okay, we did have a weekly divergence. We talk about it, 3D divergence and all that good stuff. Nearly like 6 months. I wouldn't say 6 months, but like let's see, started like June, right, till November, December. So almost like 6 months of a divergence. So we said you don't want to be messing around a 6-month divergence, even though price action could have basically retested the lows, but the probability was not that high, right? So it was time to be looking for another move to the upside. Now we got the move to the upside, got the top formation, and now we're pulling back down, right? So the big question is like, are we going to be dumping all the way down, right, to the steep prices, right, somewhere around like a 3K, 2K, and all that good stuff? Or are we just going to be correcting, right, based on our most recent pump? Okay, I'm calling it wave 1. You can call it whatever you want, okay, but I'm gonna show you the another alternative count, right, a bearish count, just to be fair for the bears, like 10K bear and all that good stuff, right? But I'm still a macro bull. You got to keep that in mind. Even though price action is correcting for the wave 2, I'm going to explain to you guys, I'm still a macro bull. All of these dips, right, got to get bought up, because most likely late Q4, right, or even like early Q4, price action could be reversing to the upside and we could be shooting for high prices. But we will talk about it in Q3, right? But as of now, okay, that is our wave 1, right, to the upside. Okay, remember what I just said, Leroy. This entire move, the entire move to the downside from like a 69K, right, down to a 15 and a half was the correction phase. Okay, so you don't want to include, if you're bullish, you don't want to include your most recent pump from like a 15K to 31K area. You don't want to include it as part of your macro correction. Okay, so I think like we're in the early stage of the bull market, right? Even if you go back to like a 2019, the move we had from like a 3K to 14K was like early stage of the bull market, right? But you don't know until we basically break out above, like, you did not know until we broke out above like a 14K, and you're gonna be like, oh, we're in a bull market. But the entire move right here was part of the macro cycle. So the first move we got right here from 15K to 31K is part of what? The bull cycle. So we're gonna call it like the early stage, and we at the same time, in terms of wave analysis, we're gonna call it wave 1. Okay, just a quick recap for Leroy. In a wave analysis, you got 5-way structure. You're not going to basically be pumping from like a 15K to 180K in 1 month, of course, right? And you're not going to do it like in 3 months, right? We could do it like in a 4-year cycle. That's why I'm saying, like, the 4-year cycle has already begun. So it all depends on how you want to read the market and how you basically going to be preparing for the end of the bull market and all that good stuff, right? So now let's talk about our wave 2, right, which is the most important wave as of now. Right, so we got wave 1, right, wave 2 right here, wave 3, wave 4, and wave 5. Okay, so now what are we looking for? We're looking for wave 2 right there. Okay, so the big question is, how deep the wave 2 going to be? Okay, I can't tell you how deep it is going to be, right, but I can basically use my fibs to try to anticipate some level of supports. These level of supports, right, they're not guaranteed basically to be absolute bottom, but at least we could anticipate, right, anticipate some sort of like a bottoming, right? If we get enough bulls to be buying the dips at these macro fibs, we could be saying like, okay, the wave 2 is done, and we could be basically going to the upside. Okay, so what are we looking for in terms of fibs before we talk about in terms of candles and patterns and all that good stuff, right? In terms of fibs, if you do a swing low from the bottom, right, up to a swing high, right, 31k, swing low Leroy 15.5, swing high 31k. Okay, 382 Fibonacci, right? Let's do this. Okay, 382 Fibonacci going to be somewhere around like a 23,865 to be exact, right? And we got 50% pullback at 21,979 for Leroy. I'm giving out all these exact numbers for Leroy, right? But you can round it up like to 24k and 22k. So 24 to 22k going to be our next level of consolidation first, right there, and we'll see if we're going to be able to break it or if we're going to be able to find a macro bottom, okay, for the end of wave 2 to the downside, right? Wave 2, okay. If not, we got 0.618 down at 20k, and we know how important 20k is, right? 20k is not any, it's not like it is a nice number, right? For 10k, right? 20k was our previous, not the 2021 bull market peak, but the 2017 bull market peak, right, was like a 19.6, so close to 20k. So that's why the level of 20k to 19.5k is so important. Okay, you might not see it like when we talking about like the wave 1 and wave 2, but if you zoom out on a monthly basis, right, you can see like that's the same level, right, we basically bottom at back in November, not November, but back in June 2022, right? We did not close the month of June, right, below 19.6, right, below the previous all-time high. So everything after that, we could have just said like, hey, if we're trading BTC on a monthly basis, it is just some noise, right? Because only one candle, right, closed below like a 99 actually, right? Yeah, 19.9, 19. Let's do it properly for Leroy. 19.3. Okay, that was our FTX capitulation, right? That candle closed somewhere around like a 17.5, and the December candle closed somewhere around like a 16.5, right? So, but in terms of like, in terms of overall structure, basically the entire sideways correction was above like a 19k. Okay, so that's why 19k 20k area, we have to keep that in mind in terms of like a consolidation when we trying to basically construct our wave to the downside. Okay, and at the same time, we're not even sure if the wave going to be that deep. That's what I'm saying. The move we just have right here could just be our wave 2, and then it could shoot up to the upside. But we will talk about those those type of move. Okay, but as of now, we will just focus on the wave 2 till we get a positive MACD over the next like a few weeks or month, and then we're going to start to talk about like a reversal. Okay, so I'm just going to talk about I'm just going to repeat the price level, right? 382 Fibonacci, right, going to be at 23.8 to 24k, and 50% pullback going to be at 22k to 21.5, give or take. Okay, and 0.618, once we get more data, we will talk about the 20k area at 0.618, right, which is right here, right there. That's where we found our bottom back in March 11, right? So hopefully it makes sense, right? So now let's take a look at it deeper, right, in terms of structure and indicators, right? So what we said regarding our 3D MACD. So what we said, remember, first thing first, okay, after we got our first capitulation on the weekly basis from the top, what I was saying was like, I'm still not bearish. Okay, remember back in April, the second week of April, after we got the engulfing nest right here, I was like, okay, It is a sign of bearishness, but I'm not going to be bearish because that's the first weekly engulfing candle. So we just have to wait for more weeks to get some confirmation like the trend will be down, right? So we tried to push back up and couldn't break above 30k. The next week we could not break above 30k, and then the first week of May, what I said in my premium was like, okay, it is likely, okay, we will be dropping lower because we're most likely going to be breaking the 3D21ema right here. And that time we did not even yet break the 3D21. Okay, that was like May 7th. Because as I've been saying, May 7th is a very important, not just because of like, market likes to be bearish starting in May, but May 7th, May 10th, they tend to be a reversal, reversal week. Okay, so we broke below the 3D21. Price action still, was still negative. So I was like, guys, let's be prepared, right? Because it is likely, we're going to be facing like a longer term sideways correction and or downward pressure over the next like a few weeks, right? So you can see now we're below the 2D21, and you can see like our 2D MACD, how strong it is in terms of like a curvature curving down, and could be facing more pressure to the downside, and that could drag the price down to these levels, okay, if you're a bear. All right, so now in terms of wave analysis, at the same time, if we take a look at it in terms of like a divergence, right, we did have a wave 3 and wave 5 divergence on our RSI right there. That's a white dotted line, right? And this one right here, wave 5 and wave 3 and wave 5. Okay, so we did have a strong divergence, and we broke below our 3D21, confirming the divergence and confirming the continuation to the downside. Okay, regardless of what type of choppiness we're going to get in this range, right? If we get one, just in case price action do not continue the downside, downside momentum, we can still say, okay, the directional trend, it is still down. Okay, so now in terms of like a trend lines, right, most of you guys already recognize the lower highs, right? But you can also copy and paste your channel, and you could, excuse me guys, all right, so you can basically copy and paste your trend line, right? And you can see, like, if you want to trade it in terms of trend line and you don't care about MACD, RSI, fibs and all that good stuff, you could just follow your trend line support. That could be somewhere around like a 23 to 24k, right? So but as I said previously, we just don't know. Sometimes I don't like these trend lines because some people might be drawing it like that in terms of like a wedge pattern, which is still valid. Okay, sometimes just because something is valid doesn't mean it is going to play out, right? The overall cycle is still down, so I don't see the reason to be looking for like a wedge pattern, even though it is valid. Okay, but within your wedge pattern, someone else could be drawing a descending triangular formation, right, and be looking for a 120 extension. And all these targets, right, going to send you down to your fibs. That's why I don't want to basically overcomplicate it. Just focus on the directional trend and your fibs if you just want to keep it very simple. But if you want to keep it very complicated, you could use your trend line supports, your indicators, MACD, your moving averages, right, even up to the weekly time frame. We just breaking below our weekly 21 EMA. MACD is flipping negative. Technically, right, these are bearish signs, right? We cannot ignore it, right? We can't ignore these bearish signs, right? Once again, it doesn't mean BTC is not in a bull market. Okay, we are in the early stage of the bull market. However, we are correcting for our wave 2, okay, after the wave 1. You know, you could call it leading diagonal, broadening wedge. Doesn't matter what type of technical technical vocabulary you want to use, right? It is wave 1 as of now. Okay, now let's be fair, okay, to the bears, to the bulls, right? I would say to the bears. Let's be fair to the bears, the macro bears, right? Not the short-term bears, right? So if we take a look at it deeper in a more macro bearish outlook, okay, it is very plausible, okay, to say this entire move, right, was our wave A, or you could call it W, and this move right here was our X, or you could call it B, and you could be looking for another move like that, okay, to wherever you want to send it to, down to 0 or whatever. Okay, I'm just trying to be fair. That's not my personal analysis, but it is just a I wouldn't even call it plausible, but I would just call it valid analysis, right? It's not highly probable as of now. Okay, so we could say the move, we got W, X, and we could be looking for Y, correction to the downside. All right, so but you just have to be very, very cautious, right? Because you might be saying like the move right here, you're going to be looking for a 1-to-1 extension to the downside, right, of your wave 1 or your wave W, right? And that will send you down to like a 6K area, right? That it would basically send you down to a 6K 1-to-1 extension of the move right here, okay, from like a 69 down to a 15K, right? If you extend that move from like a 31, it will basically take you down to 6K. But the probability is very, very, very low. Okay, I'm not saying it cannot happen, but I'm not wasting, or I'm not spending any energy, right, trying to wait for 6K or trying to analyze the market for a 6K retest or even 10K. Okay, because we discussed it back in back in Q4 2022, right, that we will be basically pushing back up to the monthly 21-EMA at least, and we did that, right? The monthly 21-EMA was around like a 28. We even pushed up to like a 31K. Okay, so we don't want to be focusing too much on lower prices and be looking for this bearish structure. However, if you think it will retest these lows, you could still wait, right? You could still wait, Leroy, right? So we got Crypto Elf. Thanks a lot for tuning in. So we got Dan XRP, Miss Bears. Thanks a lot for tuning in. So Dan XRP is bullish after we hit 31K. So we'll see. All right. So she's waiting for 51. Okay. Right, so I think it is pretty clear. Let's take a look at it in terms of fibs, right, from swing low to swing high for the macro bears, right? That'll take us below 0.618, right, between 0.618 and 0.786 if we're going to get this structure, right? But we'll see how it goes. But my primary structure, as I said, guys, just gonna repeat it really quickly. It is the lowest point, right? I would be looking for going to be, the 15 to a 17K area. Okay, and if we break it, then we could basically spend some time trying to analyze the bigger move to the downside below the range right here. But as of now, we'll just focus between 31 to 32, right? Because the 4 years, we nearly completed like the 2-year cycle after the first stop. The first stop was back in May 2021. It's already like June 2023. So it's already like 2 years after our first top right here. So in 6 months, right, we will complete the 2-year cycle based on our previous bull market peak. So, and after 2 years of a downtrend from the macro top right here, you don't want to be bearish. Okay, you want to be accumulating BTC, accumulating alt, right, and waiting for, you know, the next bull market peak. Because after 2 years, you only got like what, 18 to 24 months before you want to be, you know, before you want to start like being extremely bearish, right, and looking for another, you know, 90%, 95, 99, 99.9% for, you know, for some of these alt, right? But you don't once again, you don't want to wait till 2025 to be bullish, right? Right. So let me take a look at the chat room. So I think we're done with the live stream. So if you guys have any question regarding any alt, I'm gonna give you guys few seconds to ask regarding any coins, right? And I will take a look at those coins for you guys. If not, we just call it a day, a short live stream, straight to the point, macro analysis, wave analysis, MACD, structure wise, you know, and all that good stuff. Okay, let's take a look at XTZ USD for quiet cook. So let's take a look at it on the weekly. So on the weekly, we haven't yet retested the yearly low, somewhere around like a 68 cents. If we break this the 60 to a 65 cents, it could be going back down to retest the absolute you know, bull market low right here, you know, the low back in 2019. All right, almost like 4.5 years of 4.5 years of you know, the lows were basically 4.5 years, right? So ago, right? So but as of now, we just respect, right, the 60 to 65 cent support. That's going to be still a good temporary support. If we get a double move right here, right, just be cautious. Gotta be selling at 140 to 150. If we get a support at 70 cents, 65 cents, if we go back to a 130, 140, just have to suck it up and sell it. Okay, because it could be another double top, double bottom right here, and a possible move to the downside. It's not guaranteed, right? Just like the dollar right now, right? We'll take a look at the DXY, but just keep an eye on the 70 cents to 65 cents support, right, at 0.786, and give it time, right, to consolidate. Okay, if we break it, got a good level of reaccumulation at 40 cents down to like a 35 cents area, right? And sell range still going to be around like a 130 to 140 area, right? Let's take a look at it on the monthly. So on the monthly, it did not retest the monthly 21 EMA yet. So the next push back up could coincide with the retest of the monthly 21 within the next few months. I don't know if it will do it individually, like just pump without the rest of the market pumping, or if it is going to do it with, you know, while the market going to be pumping, right? So on the monthly basis, just have to respect the level of a 70 to a 65, right? Right there, just in case it does something like that and retest the monthly 21 EMA on the next pullback. If not, you know, it can still do something like that and retest the monthly 21 EMA on the next pullback up, right? Still around like a 130 to 140. Okay, so it doesn't matter how you want to look at it, 130 to 140 up to 150, right? The February high is going to be a big resistance, right? Hasta la vista. Thanks a lot for tuning in. which correction you're talking about, hasta la vista. Let's take a look at BNB, because we got a 5-way structure to the downside. I don't know if you're talking about the macro 5-way structure from like a 69 to a 15.5, or you're talking about like from 31 to 25. Thanks a lot, Quiet Cook. So let's take a look at BNB. BNB doesn't drop like most alt, right? It doesn't drop crazily like most alt, but it's been facing a massive pressure around the monthly 21. I saw it multiple times staying at around the monthly 21, but I wasn't just convinced like BNB is done correcting yet, right? This entire move on the monthly has been like over a year. Could just been like a sideways correction, and could be, you could look at it as a, you know, a bear flag, and could be coming back down to the June lows around like a $200, $180 to $200 within the next few months. Okay, the biggest support will be $120 to $100, but we'll see. Bears did have a strong momentum like back in June 2022, right? Before the before the pushback up, right? They did have a strong momentum to dump the price down to the low $100, but after a 1 year of consolidation, you're just going to question the bears, you know, regarding their strength to break below 180. So 180, just have to respect it. If we break it, we got 120 to 100 range. Okay, because we're not trying to time the market, but the time it takes to correct sometimes can impact the overall structure, right? So after 1 year of consolidation, you just don't want to trust the bears entirely, like, hey, they will respect 180, okay? Or you don't want to trust like bulls entirely, right? They will dump the price at down to 120. So we just have to, you know, respect each level, right? And just say, okay, I'm just gonna give it a shot at 180, right? If we break it, we got 120 to consolidate. Okay, if you're looking for the next bull market pick, right? We're not saying like a push from like a 190 to like a 270, but a push from 190, you know, to like a, you know, 2K, 3K, 5K area. That's what I'm saying, right? Or a push from like a $100 to a, you know, 3K, 4K, 5K. Okay. We got Iceman in the house. Iceman only shows up when market is dumping. Okay, which coin? Iceman is asking, hey San, which coin can make me a millionaire? Go ahead and buy Castor. I'm just joking, man. No financial advice, right? So Hasta la Vista is saying, hey, it was a 5-wave down from 69K. I mean, I said it long time ago. If you've been following our channel, right? I said it. You know, even if you take a look at it on the monthly, it looks pretty clean. You know, no sort of choppiness at all. You got 1, 2, 3, 4, and 5. Okay. But since you're looking at it on the monthly, you could also look at it in a 5-way structure like that, okay? Your wave X being right here, and you're going to be looking for your wave Y. That is still possible, okay? 1, 2, 3, 4, and 5. Okay, your wave 3 being right here, but only on the monthly, okay? Right, the reason for that is like you don't have a divergence right there. But if you look at it on the lower degree on the weekly, I cannot look at it as, you know, my wave 3 being right here, okay? Because I got a divergence between Y and X, so I just have to use this divergence. You see what I'm saying? Let me do it again for Hasta la Vista. Okay, so if I take a look at it on the lower degree, I'm forced, right, to say that's 1, 2, 3, 4, 5. Okay. However, if I go up on the higher time frame, right, I can do this, right, because I don't have a divergence yet, right? I don't have a, you always want to look for a divergence between your wave 3 and wave 5. Okay, so if that would be the case, we could get a divergence in terms of MACD, where the MACD could do something like that, right? And you're going to get your divergence, something like that. Let me just redraw it for Leroy. Like that, okay? Where the MACD just going to double bottom, right? And you're going to get this move. You don't know how deep it'll be. It could even be a double bottom. That's why I don't want to be so convinced regarding this structure. Okay, it could be a double bottom too, like that. And you're going to get now your next impulsive move to the upside. Even this move is questionable because you could still get a double top, double bottom, and another move to the downside, a triple bottom. So it is very, very complex. That's why I like to take it step by step and not try to draw any pattern in terms of like a wave. Just draw some directional trend. Even the lower degree, right? Even though I'm saying like, 50% to 0.618 and all that good stuff, I'm not trying to figure out what type of correction we're going to get right here, what type of correction we're going to get right here, because some wave analysts, they're going to tell you, oh, when we drop down here, we're going to push back up, we're going to retest it, we're going to do something. That's too much work, because I just don't know what the market will do. I just have to wait at least till market completes 50% of the correction, and I can get some sort of ideas, right, what type of correction this correction could be, right? But I cannot just say, you got an impulsive move and I'm going to be like, it is going to be a double top, double bottom. I can, because you can get an impulsive move, right? And it can be a zigzag, or it can be a triangular formation, right? Or it can even do something like that, a W. So after a very impulsive move, it is very hard to know what type of correction you're going to get. So I will not be spending any time basically trying to figure out what type of correction we're going to get right here, until we basically move sideways, at least for some days or weeks, right? Hopefully it makes sense, Leroy. It says from a 69K down, it was a clear flat correction. I don't know what you're saying. From 69K and down. I mean, we only got one flat correction, was right here. That's the only flat correction we had, right? This, I don't think this was a flat correction, okay? Because remember, the one trick I like to use with a flat correction is like, let's say when you get a move down, right? And then you get a move up, a move down, and another move up, okay? How do you differentiate, like, if, right, this is a flat correction, or if this is just a double bottom and a possible continuation? Your MACD, right? I mean, it's going to be hard to tell, but how to basically just say, like, if this is a flat correction, okay? You're going to get a divergence, okay? Whenever you get a flat correction, right, you're going to get some sort of divergence. It could be a very deep one. It could be something like that, right? Or it could be something like that. Okay, your level of sharpness could be shifting depending on the volatility whenever you get a flat correction. Okay, but if you take a look at this move right here, right, we're not getting a divergence, right, like what we had right here. Okay, so the move, right, did create a divergence right here, but it wasn't like this dip, it wasn't like that, and it wasn't like this neither. Okay, so especially on the weekly basis, okay, on the weekly you could have said slightly it looks like that, right? But overall, I don't think it is a flop. Okay, I don't think this, right, was a flop. Okay, it looks like a flop, but I don't want to read it as a flat correction because we already had a 5-way structure to the downside. You see what I'm saying? The flat correction we had was right here. That was the beginning of the impulsiveness, right, to the downside, the beginning of the bull market. So you want to look for your flats at the top, not at the bottom, because at the bottom it could be it could be a divergence between wave 3 and wave 5. Okay, let me show you what I'm trying to say in terms of structure wise, right? So let's say you're getting a move to the downside, something like that, right? So if you're looking for a flat, look for a flat at the top. You don't want to look for a flat after we drop 70% right here, and then you're looking for a flat. Do you see what I'm saying? Because this move could just be, you know, a double bottom, right? And you're going to be pushing to the upside. But if you get a flat at or near the top, the probability of a continuation is much higher. But if you get looking for a flat after 80%, 90% drop, the probability of a continuation is much lower. That's why I like to call it a doublet, right? Sometimes you get a flat and a flat, but they tend to be, you know, your second flat could be a double bottom, or it could be a triple bottom, or even a push to the upside. So you don't want to be so confident your second flat will be a continuation. But your first flat, just like what we had right here, we talk about it like for weeks or even month, right? Right there, the sideways correction. This was a flat, okay? Just like the big flat we had right here, right? Similarly, it was a flat correction, but we were bearish because we knew, right? You know, in terms of like a macro wave, right? The wave going to be pushing down. So you just have to be very, very patient and very, very, you know, open-minded with this flat correction. Okay. Another flat correction was right here. We caught this one. Okay. This one was what? Near the top, in the middle, right? We got 1, 2, and 3. Okay. And, you know, got another one right here, but very complex. Okay. Yeah, I mean the 2021 high, yeah, we did have a flat right here, and you got, you know, the same exact move we had at the top. That's the same exact move we just created right here. Your wave 3 and wave 5, you had a divergence, right? Right. So right here, wave 3 and wave 5, we also had a divergence. So you don't want to use your flat between wave 3 and wave 5. That's what I'm trying to say, because it might not be a flat. It might just be the ending diagonal of your previous wave, meaning like this entire wave, right, ended with an ending diagonal, right? But in terms of wave analysis, you might look at it as a flat correction. You see what I'm saying? It looks like a flat, but it won't work. Okay, it won't work most of the time. When you get a 5-way structure, you don't want to basically be looking for a flat. Okay. When you get 1, 2, 3, 4, 5, right? You don't want to be looking for a flat right there. Could you get it? Yes, but you don't want to be looking for it, because it could just be, you know, your wave 1, get your wave 2, and then you could be pushing to the upside. And this entire move could have just be your WXYXZ correction. WXYXZ. And your next impulsive move, right, started right here. 1, 2, you get 3, 4, and 5. And you might be waiting for your lower prices for 10,000 years, like 10K BTC. Okay. It's not hard. It's not complicated. You just have to focus on the macro, and then you basically can take a look at the lower degree and all that good stuff. But the macro is saying like this is wave 1. Okay. 30, you know, 15K to 31 is wave 1. Until it's no longer valid, I'm gonna flip to a different analysis, right? Back in 2020 was a zigzag. Yeah, you could look at it as, yes, it is a zigzag or WXY. You go back and check my analysis. Back then I called for the WXY correction right here, W, X, and Y. So that's why we were looking for, you know, 4K, 5K area. All right, so we already nailed this one, so we don't want to spend any time, you know, reanalyzing like the WXY, XZ, WXY correction we had right here, right? With the internal wave being a flat right here. And then we had W, X, and Y. You go back and check all my analysis back then, but between you know, December 2019 till basically first quarter of till March 20 2020. The only mistake, you know, I can say is like I was saying, like we could get another move down here, like to get our wave 2 before going to the upside, but we ended up basically breaking out to the upside, and I was like, okay, there's no way we're going to get this move, so let's suck it up. And that is it. That's our wave 1 right here, wave 2, and then we were looking for 44K after we broke out above like a after we broke out just above 12K, right? 13K, we said we're going to like a 44K. Okay, hey, what's up, Buzz? Thanks a lot for tuning in, man. It's been a while, man. Hasta la vista, it sounds like we're going to the moon. Jason. Yeah, Jason, go ahead and get you some Caster and or get you some Pulse X. So any other coin? Somebody asked about I think Neo, right? Let's see, I think someone says Neo USD. Oh, XRP. Okay, let's take a look at Neo before we talk about XRP. So Neo already completed its wedge pattern in a WXYXZ correction, also 5-way structure. W, X, that's Y, X, and Z, right? That's a push to the upside. Let's see if we can find a bottom right here, right? And start to look for a possible wave 1 and wave 3 to the upside, right? So, but the problem is like, if we break below $6, right? Instead of the move back in August, right? Looking at our move back in August as our X, we could look at it just like that, okay? And be looking for a wave, the Z being right here, okay? But the problem with that is like, we won't get a divergence, right, between our Y and our Z. That's the only problem, because I don't think we will get a a divergence, okay? It could do something like that and you draw a divergence like that, but it'll be so ugly, right? I hate those type of divergences, right? But we'll see, okay? It has to hold around the $6 range, right? Otherwise, if we break it right here and retest like $3 to $4 range, any move to the upside, right, will be coming back down. I don't think it will go that far, okay? Any move to the upside will come back down just to print the divergence. So it means like we could be doing something like that, get the proper divergence, right? So if we break below $6, would look for the $3, $4 range, $3 range, accumulate, and wait for that push to the upside and another retest of it. So regardless of what we're going to get in this range, just have to be looking for the $6 to a $4 range as support, and be looking for another divergence to the upside, okay? Because some of these altcoins, they don't put they don't start their wave 1, right, impulsive move, right, until BTC finishes its wave 2. Okay, hopefully you understand what I mean. Okay, so BTC is correcting in terms of like a wave 2, right, macro wave, and you know, some of these alt will put in their final wave to the downside, right? And once BTC starts its wave 3, alt will start their wave 1. Okay, that's why the BTC dominance tends to go up. Okay, let's take a look at XRP. So XRP major resistance, right? It is its monthly 21 EMA. Okay, it is its monthly 21 EMA. We just have to know that I said it multiple times. XRP will not be in a bull market being below its monthly 21. Okay, so just have to respect the 31 cents support. That's the 0.618 on the macro, from swing low 10 cents and swing high $2 range. Okay, sitting at 0.618. We don't want to break 0.618. okay, if we break it, it will shoot down to a 0.786 or even down to a 0.888. So if you ever see XRP down to these lows, you just have to know 19 cents, 21 cents, it is going to be a very strong buy. Okay, a very strong buy. Okay, because we already completing what, a possible flat correction right here. Okay, on a monthly basis, right? 1, 2, that could be our internal flat correction and a possible move to the downside right here. Or it could even be a triple bottom, right? Triple bottom right here and a shoot up. Yeah. So, you know, 30 cents range, 31, it is still a support for the bulls, right? And just have to accumulate right here. If we break it, we got 19 to 21 as our macro bottom right there, for a good swing back up to the you know, 31 or even like a 40 cents, a possible 50 to you know, 60% breakout. But you don't want to be buying XRP right here, you know, 50 to 55 cents. Okay, 30 cents, 20 cents, you know, and if we see like a 14, 15 cents, that's still going to be some, you know, some greater these are going to be some great levels to be reaccumulating 589, right? I mean, for the 589 pump. I think that is it, right? We talk about XRP, NEO, BTC, Panathinaikos. I thought that was Pancake Swap, but that's Panathinaikos, right? So let's go back to BTC really quickly. Yeah, on a monthly basis, we are getting our second monthly bearish candle, so that's not good, and that's only the beginning of the month. So closing our second monthly candle below the monthly 21, it is not a good sign in the short to medium term. So, but on a quarterly basis, as I said, I don't think we will wipe out our first quarter breakout in Q2. So I don't think BTC will drop down to these lows in Q2, right? So we got, you know, 25 days to close the Q2, so I don't think we will drop down to these lows, right? And at the same time, something to keep in mind, the quarterly 21, it is at 22K, right? So, you know, if you take a look at the box right here, the quarterly 21 is right there. So even if we come down to these lows, I don't think we will close multiple quarters below the 20K area, okay? Or wiping out our first quarter gains, you know, this year, okay? So, but it is still possible to get like 2 bearish quarterly cycles, right? Next quarter could be also bearish, but third quarter or fourth quarter could start basically to push to the upside and be getting ready for 2024. Because I think 2024 will be, the entire 2024 could be for the bulls. Remember, we split it 2023 into 2 halves, right? The first half being for the bulls, and the second half most likely going to be for the bears, right? Either choppy, bearish, or boring, we don't know. But as of now, it looks pretty choppy and bearish. Could it be boring, you know, later on? I don't know. But the second half of 2023 likely to be, or the most, you know, the most part of 2020, the most part of the second half of 2023, not the entire not the entire second half, but, you know, I would say like at least, you know, 60 to 70% of the second half will be controlled by the bears, right? Hopefully it makes sense, Leroy, because Leroy gonna say, oh, the second half has not yet started, right? Okay, let's take a look at LTC. BTC did have a nice flat correction. LTC, BTC. It did print a flat right here. So LTC, BTC, how everything started. Okay, I was myself bullish with this move, right? But as soon as we, you know, pushed back up, took out the lows right here, I was like, this is it. This was not a, you can see like sometimes you get these flat correction. You might think like, you know, price action will continue to the upside, and yet they still fail and, you know, give you a smaller, you could call it triangular formation right here, and then a dump to the downside. You got another move right here, which is a flat correction, right? So we'll just have to be patient with it, right? If we take out, you know, 300,000 sats, it is likely to be either a triple bottom, right, or a continuation to the downside. If the BTC dominance is going to be going up higher above 48%, right? So, but just monitor it, right? If we break below 310,000 sats, you might want to be very cautious with XRP. Okay, in terms of like a 3D, did have a nice divergence like that. Okay. And in terms of a wave, this one you could start your count from here, right? W, right? The anti-move right here, instead of looking at it as a flat, you could look at it as a triangular formation, right? W, X, Y, X, and Z right here. And you got your divergence between wave Y and wave Z, which is your wave 3 and wave 5. Okay, and the entire move right here to the top, you could look at it as a triangular formation. You see what I'm saying? So the move, your first move was right there, and you got your 1, 2, 3, 4, 5 as a triangular formation. In terms of X, you don't want to spend any time counting these waves, just count it as a triangular formation and a dump to the downside. Okay, and you got your, you know, wave 3 and wave 5, assuming. Okay, all right. And if you get more data, you could basically just change your structure, right, and all that good stuff. Now in terms of fibs, you do a swing high to a swing low. That is the 50% pullback. If we ended up printing a flat correction, you might be coming down, you know, to a 0.618 right there, or even 0.786. Okay, and you could just change your count as a X being right there and your Y being somewhere around here, and you could get a very nasty divergence. where, you know, this guy just going to be keep doing like that, and you're going to be printing some lower prices, and the diverge is still going to be holding. All right, we got LTC, BTC. All right, guys, it is already 1 hour. Thanks a lot for tuning in. All right, it's been a while. Just wanted to give you guys a macro update for the next like a few weeks, right? For the entire month of June, right? We'll go for another update in July and all that good stuff. But don't forget to follow me on TradingView. I do constant update on TradingView, so if you have a TradingView account, you can just follow me, because it is much easier to just record and update some quick update on TradingView, 3 to 5 minutes, 10 minutes, depending on the type of update we will do, right? And all that good stuff. So follow me on TradingView. If you find the content useful, you know, you can subscribe, hit the likes, right? And all that good stuff. All right, guys, be safe out there. Thanks a lot for watching. Alhamdulillah.